Rene Reinsberg, the co-founder of Celo. Medha Parlikar, the co-founder and CTO of CasperLabs, and Michael Gronager, CEO and co-founder of Chainalysis. Round of applause for the wonderful panel. So, let's start macro. It was a bruising year, 2022, about 1.4 trillion wiped off the market, bankruptcies, liquidity issues, collapses, and criminal allegations, just to sum up in a sentence. Do we think the pain is over? And I'll start with you. Do we think the pain is over? There was a lot of contagion, a lot of companies sort of falling like dominoes. Any more pain to come? Any stress points you're concerned about in 2023?
And thanks for having us. It's great to be here. Yeah, look, I think we're, what we've seen is, and it's very important to distinguish this, is a failure of institutions, it's a failure of individuals, right, and alleged fraud. And you know, this is very different from the technology. The reason we're here, Web3, has not failed. And what's been most surprising to me going into this year is even people that are not in this day-to-day 24/7 are recognizing that, and they're making that sort of distinguishment. So to me, I think there's probably still going to be more coming, but we're also on the flip side are seeing all-time highs in terms of developer activity, in terms of transactions on chain, in terms of new organizations coming into the space, and so I'm very optimistic about this year.
And Medha, for you, as you look at the market, I know you're more focused on sort of the enterprise side, but we have seen sort of spill over into various parts of sort of the blockchain companies and sort of crypto firms. Are you seeing any stress points that you're a bit concerned about? Any more dominoes to fall?
So in the enterprise market, we've actually recently did a study, a survey, and we found that 87% of CTOs and CIOs are actually going to be investing, either deploying or investing in blockchain technology in 2023. Right. But however, 54% of them still conflate crypto and blockchain. So we definitely have education we need to do. I don't believe that the fallout is over yet. But by the same token, we observe this in other boom-bust cycles, right? We observed this in the dot-com boom. We saw fraud. We've seen fraud even in traditional finance, right? We've seen major collapses happen. So I think this is part of the growth cycle. I think we'll still feel some more pain, but I think it's all net positive.
It seems positive from the enterprises, Medha, but just the macro environment, of course, has changed dramatically, not just in the crypto space. I'm talking macroeconomy, fears of recessions, interest rates on the rise. Are businesses not yet cutting back? Because we've seen, for example, with companies like Amazon and Microsoft, businesses cutting back on cloud spend. So they're still willing to invest in...
They are still willing to invest in blockchain because I believe that they can reduce overhead, streamline operations, and reduce compliance costs. And I think that they are looking to cut expense out of their budgets, right? And blockchain is a great tool for doing that.
Fascinating. And Michael, from your point of view, we've been speaking a lot about the collapses of exchanges. Are the miners next? Are there any stress points you've seen from the data your company's gathered?
Yeah, I think we really love to look at the data and see it from that point of view. And if you look at last year, you basically saw interest rates going up, a lot of asset classes going down. And we saw that from all of tech, we saw that with crypto, and we basically saw that following each other very nicely. Then we saw in the spring, May, June, we saw Terra Luna, we saw Celsius, and we saw Three Arrows. And that gave a few other corrections to the crypto price. Basically regains that over the summer. FTX happens, it takes another one. But the interesting thing here is that if you look at the realized losses in the space, people who put money into crypto and took them out at a loss, in the spring, that was $50 billion. In the fall, with the FTX, it was $10 billion. So if you look at this from purely don't take the drama, don't take the memes point of view, then you would look at it and say hey, something happened, interest rates and so on, and now it's a shockwave ringing out. So basically we saw FTX as being a smaller thing from impact to the industry that way, and basically see that there might be other things, but they're probably even smaller than that. So I would say I'm quite optimistic when it comes to what happens in the space and the drama. Can never say drama is over. Yeah. It's crypto, but I would say. So
do you think we've bottomed here? Because the start of the year for Bitcoin, for example, we've seen a rally, but that has come, of course, in lockstep with a rally in risk assets like the Nasdaq and some of these US stock indices. So,
and I would say I think you'll probably see those things follow each other again, as they basically have basically have done the entire last year. So let's assume, let's say interest rate starts to go up even further. We hit like 6% and so on. Then we would probably say, okay, now the price goes down further. So I think they will follow those things. Yeah. So I think we've seen the correlation will continue with traditional asset classes. But so it's hard to say whether it bottomed, but it probably bottomed together with those.
Right, and Rene, you said you were optimistic for this year. How are you going to characterize 2023? Is this a year of rebuilding, or is it a boom year?
Yeah, it's a year of regenerative finance, I think. So, and the reason for that is, look, the crises we're facing as a society right now are at a massive scale, right? And many of them are mass coordination problems, whether that's climate change, that's the global poverty, things that are being discussed here. I'm here as representing a community of builders in over 150 countries that are building on the Celo blockchain. And right now there are more people starting a project in, say, Nairobi than in San Francisco or New York. And that's really, I think, important to take a global lens on that. And so for me, regenerative finance has been a bit of a buzzword in 2022, but I think 2023, it's really going to move even more into the center because, we're all, I think, starting to realize that the financial system as we've had it doesn't quite work anymore. We are sort of at capacity as a world, and we need to find ways to bring these externalities into the financial system. And I can give some examples for that, but to me, I think what's starting to happen, there's a bit of a decoupling where you're no longer just looking at crypto assets, but you're starting to see people buying, holding them because they want to participate in the systems, right, that they govern. And so the utility value of tokens, I think, is going to really move more front and center as adoption becomes a lot bigger at a global scale.
But do just unpack that term. We should be very careful of buzzwords because they can go often very awry. Regenerative finance, give us one or two examples and how you see that playing out over the next 1 or 2 years.
Yeah, and so, I agree with you. I think in this case it helps, in a way, rally also a community that's really across multiple chains, really global, and it's giving sort of people, like a common ground. So examples, for example, let's take a project that is launching community currency in Curaçao that's backed by tokenized food forest and other natural assets. And so really bringing some of what otherwise would have been externalities and sometimes not really reflected in the financial system and making them part of the currency system. And so as people use these currencies more and more, you end up preserving a lot more of these assets. And so you're really having these positive externalities, for example, on climate. There are examples like that apply more to financial inclusion or just the way communities kind of work and grow. But to me, there's a shift here in the thinking as well. We're not just replicating stuff that already exists in the traditional system and bringing it on chain, but we're actually kind of going the next step now, and we're similar to the internet, right, where there's new use cases that are coming up.
And use cases in the enterprise space in Medha, what are you seeing most demand for at the moment and sort of in the year or two ahead?
Well, we're definitely seeing tokenization of assets, right. Specifically digital assets. We will be minting 25 million patents on the public Casper network, which is very, very exciting. And it allows the creation of patent bundles. It allows for transparency and clarity around who owns a patent, and really gives intellectual property and owners, it's a very expensive portfolio, right? An opportunity for them to monetize those assets, right? And taking it further to trade secrets as an example, but all of the kinds of intellectual property. So we're seeing a lot of excitement around provenance and tracking of assets and really using the blockchain to help govern that for enterprises. So that's one very exciting area. We're doing a lot of exciting work in the area of traditional finance, where we are doing things like invoice factoring and tokenization of leasing assets. So a lot of really interesting work even happening in traditional finance, really uplifting their systems and streamlining so they can get real-time view into their cash flows, right? Which, if you think about some of the collapses that have happened in the past, the reasons they happened is because those systems are so antiquated, right? They're not getting real-time telemetry on what's happening in their, with their cash flows. So we're really excited to be working with them to help uplift those entire systems.
And you made an interesting point earlier about enterprises sort of conflating at times sort of blockchain technology with sort of cryptocurrency.
Very much so.
Now, CasperLabs, of course, has its own token. So when you work with enterprises, Are they interested in that part of the equation? And are you sort of using this token with some of the enterprise solutions you're working out? Or are sort of businesses very much like, no, we kind of don't want to touch anything that resembles some sort of, cryptocurrency. We're happy just with the tech.
It's interesting. Right now, we're noticing a significant uptick in hybrid blockchains. So they are not that, afraid of touching the public network. They want access to the public network. Right. They're very cognizant of private, confidential data, both from a competitive advantage perspective, trade secret perspective. So they do want to run their own infrastructure, but they recognize a couple of things. One, that there's a growing, abundant ecosystem that they want to tap into. So they're very much interested in that. And two, they also recognize that private blockchains really don't have the security guarantees that public blockchains do. So they're looking to secure these private blockchains as private layer 2s. And so the Casper mainnet becomes very useful because it provides those security guarantees for all these private networks.
And
can I just add something? Yeah, so we have, I totally agree. We have this, we've seen this happening. So Deutsche Telekom bought Celo tokens and is staking and actually running validators to help secure the Celo network, so public infrastructure. And, I think this is a trend that's going to continue also this year. And so this goes back to the utility point, right? You're no longer just buying this as a financial asset, but you're really looking at the utility of the assets. So yeah, very much agree.
Yep.
And Michael, you obviously help businesses a lot with things like compliance and areas like that. So, just speaking to Medha's point about businesses kind of wanting access to the public chain, but a bit concerned about data. And of course, many of these could be regulated businesses in financial sectors or anywhere else. How are businesses approaching sort of blockchain technology when it comes to this kind of public-private blockchain situation?
So it's very interesting because what you said before, and like one of the conversations I have over and over again right now is that the idea of what's going to happen in the future is that you will have tokenization of real-world assets. They will move in some permissioned form on public ledgers. Right. Because again, it gives security guarantees, it do other things that way. And what we really believe in and like basically enable as a company is that how can you from traditional finance interact with something that's open, everyone have access, slightly dangerous and so on. And you can do that through like adequate risk scoring, adequate like data that you can get on customers and follow the breadcrumbs on the blockchain. Yeah. And I would say we see increasingly more companies getting interested in that. When we look at it from the traditional financial institutions, we saw the boom and bust of 2013. We saw it again in 2017, what happened there. And banks actually wanted to enter back then, but they entered from a momentum point of view. This moves fast, it grows, we better jump on it. And then when it stopped, they jumped away. And I've had conversations for multiple years now with banks, and it changed. It changed back in 2020, where it basically said, it's been around for 10 years, it's not going away, we need a strategy. Mm-hmm. And banks are good at strategy, so they build long-term strategies to do that, and we see multiple use cases in banks where they also include public ledgers, where they include tokens and so on, and that's where they work with us and basically get comfortable with there's processes to do that and there's data to do that.
Mm. I want to talk a bit about regulation as well. It's a huge topic here at Davos amongst the blockchain and crypto industry. Medha, can I start with you? Because in the EU, we've got this MiCA coming into effect. In the US, we had Biden's executive order last year. We got, at the moment, not really much movement in terms of regulation with the SEC and the CTFC sort of fighting out over who to regulate. But really, a lot of the focus has been on areas like stablecoins or on exchanges. And so regulators, I guess, to some extent, are getting a little bit more discerning about specific parts of industry. But as it relates to what CasperLabs does and the space you play in the enterprise space, if you were to speak to regulators, what would you say to them? What is it that you want to see on the regulatory front?
Yeah, so I mean, you definitely don't want to quelch the technology. Mm. I think the technology and allowing a space for the technology to thrive in your jurisdiction is incredibly important from a competitive advantage. I would even go as far as say it's a national security concern, right? Yeah. You really don't want to lose competitive advantage. You don't want that innovation to be quelched, right? You don't want the United States, for example, to be a follower, right? The United States was really a leader during the dot-com boom, right? We led that innovation, and we should be, I'm speaking from the US perspective, we should be also a leader in the blockchain space. So having sensible regulation makes a lot of sense. It will allow the innovation to thrive, and really educating the regulators that blockchain is not crypto. I think this is an extremely important distinction, and to protect developers that are building blockchain technology, to allow them to not feel like they're at risk, right, when they're building and implementing, smart contracts on the blockchain, right, and having really smart regulation around that. So, a developer or somebody that is building, let's say, a loyalty token that they did not intend for it to prescribe any value to it, and the community does that, that developer is not at risk in the future, right? I think regulation like that is really important for the industry to thrive.
That's very nuanced.
Yeah, very nuanced.
So interesting. And Rene, I mean, Medha there spoke about smart contracts, and we've not yet touched much on DeFi or decentralized finance, but the regulators I mentioned very much focus on decentralized players, exchanges, stablecoin issuers. But when it comes to DeFi, there's a ton of risks. We've seen a ton of scams, ton of issues around governance and various other areas at the moment. But also, there's not really a sense that the regulators are aware of DeFi and its potential, how it works, and they're still trying to get to grips with it. So when it comes to kind of regulating DeFi, there's so many questions, AML and all of these know your customer and all these other parts. As you look at the DeFi space, how would you like regulators to approach that topic in the future?
Look, I think education is really critical. And we have a bit of a unique view on this because we're focused on mobile. So Celo has this Snark-based light client that actually lets all this good stuff we're talking about actually function on just a simple phone. And with that, we've seen a lot of adoption, particularly around DeFi use cases, people now having access to loans, programmatically, right? Like without having to walk into a bank, really anywhere in the world. We're seeing people making payments, merchants getting paid. I mean, there's a lot of these real world use cases that for the most part are happening, the transaction sizes are small, right? There's people sending each other, $10, $100 worth of value, and often in local currency. But these are exactly, I think, the use cases that are important to bring more to light now, right? And especially as regulators are looking at this industry, and Michael mentioning banks coming in, yes, of course they are, because they're seeing some of this technology, right, really starting to actually fill the needs that they are traditionally have set out to fill, and in many cases doing a really good job and really extending the reach of the traditional financial system. And so to me, I hope that the regulation that comes to protect consumers also actually looks at the value that it's already bringing in some of these cases. And we have a pretty global view on this. We talk to a lot of regulators, and in many of the countries where our entrepreneurs are based from the Celo Foundation, and try to help educate, but there's more education needed, right? I think we touched on this briefly in the beginning, sort of this distinction between, the Sam Bankman-Frieds of the world and, smart contracts that are providing, loans, right? I think there's two worlds, but I think we need to continuously carry that word out there and help show that, here's a concrete use case of someone getting value from this technology. So I think that's a big focus for 2023.
Yeah. And Michael, from your perspective, with terms of regulation, can we think a bit more near term? What do you think is most likely to sort of come into effect and over the say next 1-2 years? And in what areas do you think businesses are going to have to start looking at compliance when it comes to the regulation that we may see in jurisdictions?
Yeah, I think it's for more like dynamics in political systems. I don't think that we will see regulation happen in any short term, and that's typically how it goes. I would also say that reaction to, for example, what happened at FTX, regulators will have immediate reaction to that. Yeah. That's 18 months. So that's typically what happens there. I do think that a call out to regulators, and going back to the first question you asked on that one, is that I think there's basically 1 to 2 things a regulator needs to be concerned about. One of them is consumer protection. That's the overarching goal of any regulation. And in the modern world, consumers are global. And that means the regulator needs to think global. And it means that they only have purview over one part of the globe, right? That's their own jurisdiction. So it means that they're in competition with every other regulator. So they need to create regulation in such a way that they attract innovation and companies, so they can keep their customers. If they failed on that, they also failed on the other one. Yeah. So it's really, really important to balance regulation that way. I think another piece is in the executive order you mentioned before, there's a huge focus on nation-state actors also in the crypto space and the risks around those. And that's definitely something that'll be looked on at probably more urgency than over the next year.
You're talking about sort of cyber attacks from
cyber attacks for nation-state actors
yeah.
that we have seen in very big amounts, like yeah. $1.2 billion last year went to North Korea at least, right? So that's in cyber attacks.
And has that a lot of that come from currently the DeFi space?
Yeah, so what we saw last year was clearly hack of bridges as being one of the big things, and bridges are like interaction between two blockchains, and they got hacked and funds were stolen there. So that's been a vulnerability in the crypto space last year.
Interesting. Rene, can I pick up a point with you actually, because I want to just have a very quick chat about stablecoins since they have become such a key part of the equation here.
Yeah.
You're running an algorithmic stablecoin. Is that right?
So there's a protocol on Celo called Mentor protocol. Yeah. That is, has kind of a mechanism to issue stablecoins that are backed by any sort of basket of assets or assets, on-chain assets, right? So,
but you're backing these with other crypto assets, not
currently, yes.
Fiat or treasuries or anything like that.
There's some stablecoins, other stablecoins in there, but the long-term vision there is to actually back these stablecoins by natural assets, right? Yeah. Now there's a window here where we need to build up liquidity in those assets on chain so that can work that these stablecoins can work even at scale. But that's also powerful because it basically creates demand for that to happen faster. And so we've been seeing last year, tokenized carbon offsets coming on chain. We're seeing more and more natural assets coming on chain, biodiversity even being tokenized coming on chain. And so when you end up having the majority of the reserve or the backing be in something that's tied to the local economy, right, or tied to kind of real world assets, then you also remove the volatility or sort of the risks that you would otherwise see when you have a backing that's itself in a basket of highly correlated assets. And the Mentor team has been super thoughtful in really adapting, and the stablecoins have held their pack throughout.
And are you confident because we saw what happened with Terra USD?
That was a very different, setup. But yeah, experimentation generally is good, right? Because we're still early in DeFi now. Yeah. Some of these things had gotten very big, very fast, right? And so, here I think we do need founders, we need operators that are responsible and that are sort of also making sure that the public is educated, right, around the risks, so to avoid another Terra kind of fallout.
And Medha, how are the enterprises talking about stablecoins at the moment? Because we've seen so much discussion about the ability to sort of move money cross borders quickly. Mm-hmm. Central banks talking about their own effectively kind of stablecoin, a fiat central bank digital currencies, etc. What kind of inquiries are you getting from the businesses you speak to, and are they?
There is interest. There's definitely interest in stablecoin infrastructure.
Yeah.
We've received a lot of requests for stablecoin infrastructure on Casper.
In what way?
It's interesting. What they'd like to see is streamlining the entire settlement process.
Okay.
Right? Basically stepping away from having to send checks and invoices and all of that, right, to get real-time reconciliation, and just streamlining that entire process all the way through. So you can think you're running a private blockchain, you're running economic activity in this private blockchain, but then you can settle on a public chain, right? And then take the effects of that transaction and then reflect it on your private ledger. Mm-hmm. So again, that goes back to the hybrid model. It goes back to, everything we've discussed, and really streamlining all those operations is very attractive to business, right? They are looking to reclaim overhead through that mechanism.
So when it comes to that, would that be something CasperLabs would do, issue a stable coin, or?
We would ideally like to work with other actors in the system. We would love to work with Circle, and have them implement a stable coin, or with Reserve Protocol. So there's a few people, a few agencies we want to work with to help implement that on Casper. Yeah.
And Michael, from your perspective, look, so far stable coins have basically just been the backbone of trading, not much else. How do they develop going forward, or what are you seeing emerge from the stablecoins?
Yeah, I think, again, just picking some numbers here, $125 billion are stablecoins, and not stablecoins, but actually backed by dollars. So there are $125 billion that's tied up in bank accounts here and there and safe assets that backs the crypto industry today. That's amazing. I think that the reason why we've seen the huge success of stablecoins so far is that that's one of the easiest real-world assets to tokenize. Because we have a tradition that we can move them around with oversight, but actually with no permissions, more or less.
Yeah.
And that's why it worked really well. I think what we see in the stablecoin space is that this is also an amazing way to transfer funds for remittances. It's an amazing way to transfer funds for like between companies and sub-entities in various jurisdictions. And they are being used for that today as well. Yep. So it's not that it's only trading and arbitrage. Yep. Just the mere amount that we see today, it's huge. It's where like more than 10% of the crypto space is stablecoins.
Right. We've got a couple of minutes left, and I always like to end my panels with more sort of forward-looking ideas that people can go away and think about a bit. Rene, I'll start with you. When you think about the next sort of 2 years, what do you think from a tech perspective is going to be the big breakthroughs?
Yeah, and maybe just to quickly tag on to Michael, just Celo specific, we've seen in the last 6 months a doubling of on-chain transactions, and many of those are transfers of stable coins, right, between individuals in sort of like a global setting. But yeah, I think from a trends perspective, I'm a champion for refi, so I do hope that we see more other assets. We started with dollars, bringing dollars on chain. Let's bring other assets on chain, and that will open up a lot of possibilities because again, those assets, once they're on chain, can be a building block in this new financial system. And so that's something we are very excited about. Mobile remains, I think, really a key technological differentiator. And so today we have close to 20 million wallets on Celo. I mean, I hope that we're getting to 1 billion wallets at some point. I mean, if we want to, the promise of this technology is to really help a lot more people, and we have some room to grow there.
And Medha, for you, big breakthroughs next couple of years?
Oh man, I'm really looking forward to announcing the first Fortune 500 companies using a public blockchain, right, in some mean. So that is definitely a goal on our list.
Fantastic, Michael, for you.
Definitely more growth on the stablecoin side. More assets will get on chain, and then I think you'll see a lot of growth that we can't even imagine in the DeFi space, where a lot of new things will pop up there.
Interesting. Well, Rene, Medha, Michael, thank you so much for your insights. That was great. Covered so much. So thank you so much for your insights and giving us a glimpse of the future. Round of applause for our wonderful panel here. Thank you. Thank you.